Hello everyone, welcome back to our channel and welcome back to the brief updates. In this update, we wanted to talk to you about Blue Owl's cancelled BDC merger, which is turning out to be a case study in private to public transitions. Now, Blue Owl Capital recently withdrew a proposed merger between two of its business development companies, one which is publicly traded and one which is private. And this happened after a lot of investor pushback. This deal offers useful lessons about the structural tensions that emerge when private assets meet public markets. Let's talk about the mechanics out here. Now, the proposed transaction would have given investors in Blue Owl's private BDC shares in its publicly traded counterpart. On paper, the exchange was an asset neutral one. Holders would swap their claims on $1 of assets for an equivalent claim in the combined entity. The friction actually arose from the valuation gaps. The public BDC shares were trading at roughly 20% discount to the net asset value. Private investors accepting the swap would gain immediate liquidity but at a meaningful haircut if they chose to sell. There was also structural asymmetry out here. What made the deal particularly interesting was the conditional design. Had the public vehicle been trading at a premium to the net asset value, the exchange ratio would have calibrated to its market price rather than the book value, a structure that would have favored the private investors in that scenario. The asymmetry highlights a recurring challenge in the alternative investments. Complex structures can create perceived conflicts between different investor cohorts, even when the underlying economics are defensible. So, what's the broader context out here? Now, the episode actually unfolds against a larger industry push to expand retail access to private credit and other alternatives. With trillions in US retirement assets as the potential market managers are navigating as to how to bridge liquidity expectations between the public and the private sectors, particularly as the credit quality concerns weigh on the public BDC valuations. Now, the reason that all this became even more contentious was the fact that Blue Owl's private fund was reportedly already experiencing redemption pressure, adding urgency to the proposed combination. That's all that we wanted to share with you in this brief update. Stay tuned in for our next one.